Hey guys, welcome back to another week of fundamental analysis. I have got a new phone, so the camera setup might be a bit different, but we're going to run everything the same. Let's go through, let's actually see how my trade's going. So you guys know I took a US 30 trade last week. We have trailed under this high low here and under this daily resistance. It's trailed at 1.2R. You guys can see price is just sort of consolidating, building up liquidity. So we could see two scenarios happen. Could spike up or could come down, maybe even come back up here. So we've got our stop moved here. I'm happy to trail now. What I'm hoping for is for US 30 volume to come up. We can trail down through here. But for the time being, nice 1.8R. For the time being, we'll keep it at 1.2R. This is a pretty good trade. I'm happy with it. We're at all-time highs, so no real structure to trail from. Just keep trailing off the higher lows essentially. Okay. Going through this week's fundamentals, 25th of November to the 1st of December. Just a reminder, guys, that this is obviously not financial advice. This is just what I'm trading, what my thoughts are on the markets and the economic news. COT, we actually didn't have a new COT report. It is going to be released on the 2nd of December, so can't really comment too much on COT. US data, we did have PCE and consumer confidence, with PCE numbers being as expected, inflation still remaining somewhat sticky, and we're going to delve a bit deeper into this whole concept, whole sort of, I guess, a roadblock in terms of, that might be an indication of stagflation, but we'll see. This year, we're obviously not trading for the rest of the year, so not a real bother to us. Consumer confidence was pretty much as expected. It did get revised up, and it is a higher reading than last month, which is, yeah, it's good. It's the overall trajectory of consumer confidence is positive, net positive. For Aussie data, we had CPI year on year, and that was lower than expected. You guys can see it is 0.4% lower than forecast, but we will dive into it and just sort of give a rationale why. This week's data, we had consumer confidence continuing to improve. It's reaching the top of its range over the last 2 years, which is a good sign. 56.4% of consumers expected stocks to increase, 21.3% of consumers expect stocks to decrease. So even just on my trade of US 30, that's giving me confidence to keep trailing, have that position still on, because if the crowd is expecting stocks to increase, then it will continue to increase until otherwise, right? So obviously we don't want to be fully committed to it, but we are short to medium term trading, which means if these trends are do persist for a couple weeks or months, we can capture most of the moves before it turns the other way, essentially. So it's a good sign for my US 30 trade. We had FOMC meeting minutes as well, and I didn't really paste any quotations, but there was still uncertainty, no direction to either rate. The cash rates being, excuse me, being kept the same or cuts, and they keep referring back to economic data. We're going to adjust the rates depending on the data. So no real indication for anything. We had CPI year on year for Aussie. Now, this is the reason why I wanted to delve a bit deeper into it. So on face value, you can see that actual versus forecasted is quite considerably lower, 0.4%. But then upon reading the actual news, the ABS statement on 19th of November had actually issued a correction on childcare costs, which affected the CPI numbers. It reduced childcare index by 5.8%, which led to a lower CPI reading this month. So that was highlighted by the ABS. They just still wanted to see, look, although that current printing is significantly lower, we might think that inflation's being controlled, that this childcare cost actually led to a lower than expected reading, which is why inflation, if it's still normally 2.5 without that childcare correction, still quite high, still not at its target rate. So RBA Bullock has also, Governor Bullock has also spoke, and the sentiment is that rates aren't changing this year. They might even predict early next year in terms of May, not early next year, but May mid-year. So you guys can kind of see the sentiment in regards to Aussie right now. USD, we had Chicago PMI less than forecasted. We had durable goods order being less than forecasted, but we focus on core, which is slightly less than forecasted, but not significant. We had unemployment not significant, preliminary GDP being exactly the same. PCE is what we want to delve into. Olu Sonda, which is the head of US economic research for Flint Ratings, has quoted that the disinflationary trend that we saw earlier this year with rate cuts, or not even rate cuts, but just the rate hikes doing its thing, the disinflationary trend we saw earlier this year has effectively stalled as we head into what's likely going to be a bumpy 2025. So that's, for me, what I'm reading is inflation still sticky, stagflation, right? The news articles alongside PC numbers also commented on Trump, his tariffs being 25 of all products from China and Mexico, which is a big, big portion of what the products that are in America, because China obviously being China and Mexico being right next to America is going to likely drive prices higher for consumers. And again, that concept of stagflation. So look, just keeping those two things in consideration. Obviously, for the rest of this year, we're not trading, but gold might actually go higher. We thought a couple of weeks back, the last week and the week prior, we thought gold might have been on its bear run, but um, it might actually be ranging and continuing next year. So something to keep on top of. Moving into this, you guys can see PC has increased in the last 2 months, sticking inflation after rate cuts. No other readings. We have next week's data, retail sales for Aussie, manufacturing, which is the weak link of USD in terms of PMI numbers. So it'll be very interesting to see what happens there. We've got job openings, we've got GDP quarter on quarter for Aussie, we've got NFP, so big data next week. Powell speaking on Thursday as well. Very interesting to see what happens. My bias is right now. So I've rewritten this one. Gold has an unclear bias currently. We have elements of stagflation from this week, such as hotter PCE reading, Trump's tariffs, FOMC agenda. And we have technicals not showing any clear signs. So even if we had the green light to trade, I wouldn't want to trade gold right now. US 30, we had the election plus strong consumer. So I basically still long on US 30. However, again, this hotter than expected PCE print, or well, not hotter than expected, but still like that issue of stagflation, high inflation numbers means, I trust my stop, do my thing, but just err on the side of caution for this one. AU still choppy. So let's go to the charts. Daily, you guys can see US, the dollar index is starting to pull back a little bit, right? We see gold that we thought we were going to short here. We could have actually had a nice short position here, which went down 3R, but nevertheless, you guys can see gold might have picked up from here, may have. So what I might be suggesting is, with that concept of stagflation in the next couple months, potentially, that this move here is just a bit of accumulation until we get on another bull run. We are heavily at all-time highs, but the fundamentals are there. US 30 still trailing all-time highs. AU still choppy, right? AN that we're just trying to start to see if we can trade. You guys can see my, one sec guys. Yep, my thought process on AN obviously is not working. I thought it might have pumped up, but it's coming down, starting to chop again. Price action is not that nice. So yeah, let's continue to see how US 30 goes. I'll speak to you guys next week.